because Zeder has acquired the remaining 51% shareholding in Klein Karoo Saad Bemarking. Now, to discuss this acquisition, we're joined on the line by CEO of Zeder, Norman Cilliers. Thanks for joining us, Norman. So you've been busy this week because you also announced the acquisition of a Zambian milling company for 27.5 million rand. But talk to us about what specifically the seed maker means, because of course you're just essentially owning the company now. But talk to us about the growth prospects and what upping your stake in it means for Zeder.
Thank you very much. I'd just like to apologize in advance. I've got a very bad line, so if you don't hear me, I apologize. We're very excited. The seed investment that we made today actually was announced about a year ago. When we bought the 49% share, we also had the option to extend it to 51, so we just exercised that option. And I think our enthusiasm and our interest remains the same. In a nutshell, the world needs food. Africa's got the resources for it. In order to produce food, seed is a critical element. It's a nice, scalable business. And between Klein Karoo Saad and Agricor, we think we've got a great platform to participate in that growth.
And you've been making acquisitions, as I was saying, sinking your roots deeper into Zambia. So the Zambian milling company, as I understand, you're in Zambia at the moment, or you have been this week. How does that fit into the plans in that part of the world? Because you've also got Chaitin there. And what type of returns? I mean, what's the time scale and time horizon for returns from these agricultural assets? Because you've been putting a lot of money into them recently.
Yes, I think the investment in Zambia was $27.5 million. And it fits very, very well with our grain strategy of Chaitin. So Chaitin made that acquisition, so we've got a 76% in Chaitin. And the idea there is just that the supply chain is very inefficient. So if you're producing commodities and you want to get it into a converted product for the consumer, it's not as efficient in a country like in South Africa. So you tend to have to own various parts of the value chain. So for us, it just gives us a great asset that can ensure that the products that we produce can be processed and converted and distributed into the market. I just want to caution that it is still subject to the Competition Commission, so we're hoping to take ownership in about January, February.
And then just returning to that question around returns, I mean, what type of time horizons do you have for investments like these?
Well, on the milling side, for example, it's already a cash-positive company, so we're buying into one of the most sought-after companies in the region. We would argue it's probably the best-run mill in the northern area servicing the DRC and the Copperbelt. So it is a cash-positive business. It's already up and running. It's not a startup, so there's absolutely no J-curve on that one, so there's an immediate impact. On the farms, I think the farms that are completed are cash-positive, and the returns are already evident. But we are also developing new greenfields and lands as we go. So to answer your question, this gives us a great blended play into Zambia, so immediate cash returns and cash flow while at the same time developing longer-term assets.
Norman, thanks for joining us for that. Norman Cilliers is the CEO of Zeder.
Right, let's have a look at another JSE listed company now with some news, and that's Centula Mining. It came up with its results earlier today. This is from Mining Weekly. I'm going to read you this now. It says JSE listed mining services provider and coal miner Centula Mining on Thursday reported a 35% increase in headline earnings a share to 11.5 cents. That's for the 6 months to the end of September. However, revenue declined by 19% and the group's earnings were adversely impacted by a 273 million rand impairment on mineral rights held for sale. In the studio with me in Cape Town now is Robin Berry, the CEO of Centula. I'm not being unkind here, but these are quite noisy numbers, Robin. Can you sort of characterise the last 6 months and what the company is right now?
Yes, I think, thank you, Lindsay. I think, where we are right now is that having taken the decision to move out of proprietary coal mining, we're going to focus our attention on mining services provision, and that's really in 4 specific entities. Bulk earth moving, overburden drilling and blasting, exploration and crane hire.
That's where you started though, wasn't it? Just mining services?
That is correct, but we did start out as a fairly focused mining services company in bulk earth moving. We diversified into the other parts that I've just mentioned, and at the same time we also took some stakes in some coal assets. Having taken the decision to refocus on mining services, I believe there's a strategy that really exists on 3 fronts for those mining services. First of is the bulk earth moving, and as we've said, the process during the 6 months has been stabilization, get back to something that approximates returns that we would see for that type of business. Grow the businesses that have good bases, that's our crane hire and our overburden drilling and blasting. And of course, exploration, which is at an all-time low as we speak, but will turn as the cycle turns, put that in a holding pattern and make sure that we're there when it does turn.
Well, let's talk about the coal mining assets first of all. You went into coal mining obviously for a very good reason, and it hasn't worked out. I mean, how much of an impact on the company has that been? I mean, how much has that set you back?
I don't believe it set us back. What we did do was to get into coal mining in order to diversify into part of the mining services where we could actually create our own destiny, because clearly what we provide are services to other clients. We're a price taker, and by getting into the ownership of coal assets, it gives us the ability to actually put some of our services to use on those assets. And since acquiring the stakes in the various assets, we've managed to sell most of those stakes, mostly going to the redemption of debt, which means that we did have currency to achieve that over the whole period that I've been involved with this company.
Kevin in Joburg's got a question for you. Go ahead, Kevin.
Robin, just on the third point, you mentioned repositioning or restructuring the exploration operations. And you mentioned that in the results this morning, but can you just unpack that and what your intentions are there?
Yes, I think first and foremost, with the huge reduction that we've seen in exploration, initially in South Africa and predominantly in the PGM sector, and then more recently, I think just across the piece, where most explorers are either cash constrained or they're looking after their cash. So what we're doing is making sure that we stay in the areas that we've paid school fees to get into, and that's mainly West Africa through a base in the Ivory Coast, Central Africa in the northeastern DRC, East Africa and Ethiopia, and of course retaining a little bit of diversity with our bases in Mozambique and Botswana.
Robin, it looks like you've got some legal issues ahead with the likes of Keaton, who reported yesterday as well. And you initially initiated a claim of 41.5 million rand against them for unpaid services. They came back and said that they were unhappy with your services, so slapped on 120 million rand claim for a substandard mining services. So what's going on here, and how do you take this forward? I mean, because this is represented as a liability on your balance sheet.
Well, at the moment, it's a contingent liability on the balance sheet, and at the same time, obviously, we're still showing Keaton as a receivable in our accounts. I think it's probably prudent not to get too into the legal process, but to suffice to say that obviously, we believe that our claim is real. It was for services provided during the latter part of the contract, and of course, the agreement we have with Keaton provides for arbitration to deal with the counterclaim that they brought against us.
Just very quickly, just to wrap this up now, the company has been through some tough times. It was a darling of the exchange for a while, and as I say, it's up 25% today on the JSE, up 9 cents to 45 cents. Is mining services a viable business in South Africa and beyond our borders? Is there going to be